What is going on, guys? It is your favorite mortgage lender, Abdel Kouatmi with Got Mortgages. I hope you guys are having a blessed day. We actually got some decent weather today for the first time. Super cool that we're now seeing a little bit of the transition in regards to, it getting actually dark out a little later. I noticed it today when we were going to, I walked outside, right, going to my home and I started noticing in the morning that the lights were actually turned off a little earlier. So I started noticing. I'm like, oh snap! I got to make sure that we go back and reset it. But enough of that. What do we got going on in terms of the market? So jam packed data that we're expecting last week. This week we saw a little bit of fluctuation when we're talking about the market. We're going to start seeing a big impact, but we got some Fed minutes that did a little bit of a shift within the market. Now, existing home sales went ahead and rebounded in January, which was awesome. Started to show a little bit of a fluctuation. Actually, we saw a little bit more homes start to pop on the market last month comparatively to the month before that in December with 3.2 months of supply, which we're going to dive into. The Fed, again, was in no time in a hurry to cut rates, which has been the consensus over the last few weeks. This is why interest rates right now are remaining a little bit sticky, guys, is mainly because we're under the expectation potentially that the Fed was going to go ahead and cut in the first March meeting. That's obviously no longer the case. We're going to kind of keep an idea on that. Now, we also saw initial jobless claims, a little bit of a turn, and then we're seeing some recession forecasts obviously start to trend lower, right? Now, when we go over existing home sales, check this out. We're still at only roughly about a 4 million sales in terms of existing home sales. Now, that is an increase of 3.1% month over month, which is great. A little bit of a decline from last year, which is expected. The average home price at the same time has jumped up for over close to 380,000 homes that were expected. We're at right now roughly a 3-month supply of homes. Again, January's month gain is the start of more supply and demand, which is kind of the expectations of what we were looking for, right? So existing home sales rose 3.1% from December to January. 4 million units were made available. And then we started seeing its sales were down just 1.7%. But again, the measure shows existing home sales for both January, and those basically reflects the numbers for people who are looking in November and December. Now, again, we start seeing the increase in listings. I'm starting to see a little bit more homes start to come on the market. We're starting to see a little bit of a fluctuation from that regards, which is good. But again, there's still just only 1.01 million homes available, which is super low, below healthy levels, again, of that 3-month supply of really what we're looking to pace off of as we're in right now. So we're still on that basic economic demand supply chain 101. When are rates going down? I have no idea. I'm going to probably say closer to the next 2 Fed meetings, we'll have a better idea. I want to say closer to hopefully April, May, we'll get some more insight. This week is expected to shift the market extensively in regards to what we're going to go start seeing in regards to the market. So again, the Fed was in no hurry to cut interest rates. Obviously the minutes that we saw clearly dictated that as well. Obviously we started to see now a little bit of a comments from the Fed in regards to them now seeing more data before they ease on monetary policy. Now, it's crazy because we always had for quite some time an expectation that the market was going to slowly turn. And then around December into January, the Fed came out and said, looks like inflation's been coming in low, guys. So we are going to most likely cut in March. And then we got, for the employment data week, a lot of higher than expected jobs. And that literally shifted the market. That's been a little bit of the expectation, unfortunately, which is kind of causing the interest rates to obviously be a little volatile, kind of tick back up to where they're at, right? So again, the Fed members, main thing that we want to see is this Thursday, we're going to get the PCE report, the Personal Consumption Expenditures report. This is the Federal Reserve's biggest gauge when we talk about that. So we're going to kind of see that. And then I think if this report comes in good and we can get another month supply of data coming in well, I mean, I just got notified right now. It looks like Expedia is supposedly looking to lay off to cut about 1,500 jobs. So all these massive companies that are doing layoffs and cuts and things like that. It drives me crazy to see that they talk about all these cuts, but then simultaneously it's just not making sense in regards to where they're claiming all these jobs are being cut, massive layoffs, but then they're saying that employment is going up. Makes no sense. Now we start seeing initial jobless claims, okay, and that's a consistent weekly basis. Obviously saw a little bit of a decline. Continuing jobless claims saw a little bit of a decline too. So although it is a little relatively low, which again, remember guys, we're always going to talk about inflation and the employment market when we're talking about the market, because those are the gauges that are affecting the interest rates. Now, again, real-time interest rates, we're starting to see a little bit of a fluctuation because the Fed is closely monitoring, like I said, the employment data on that month-to-month and yearly basis. Now, when we look at the recession forecast, this was a good thing. We started to see now the recession forecast in January brought a 0.4% drop. Again, a 22nd month consecutive drop when we talk about the economy and we talk about the LEI, the Leading Economic Index Report. Now, again, despite January, we saw that little bit of a decline. We're still seeing that the LEI continues to slow down and signal to a little bit of a slower report when we talk about signals of recessions, right? And then leading off towards the end of the week, we're going to go over what are we expected to go into this week. I already covered it, but we got some new home sales data that came in earlier today. We got a lot of different inflation data reports. The biggest difference maker is truly going to be Thursday with the PCE report, the personal consumption expenditures report. What is going to come in? We have the GDP report, gross domestic product. That actually will come out on Wednesday. If you guys remember about a month ago, the gross domestic product actually showed that inflation was close to 2%. So if we can get that data and we can get the PCE report to come in and just show that there's essentially that glitch when we talk about the CPI report and when we talk about all these different informations, it's going to give us the ideology for that. So again, we'll keep an eye on that. The mortgage bond market right now is reacting a little unfavorably because we had a treasury auction earlier today that actually was met with not that much demand, which is causing a little bit of a fluctuation. Now that auction, as you guys can see, most of it is really in advance to what we were expecting. So if you kind of shift down here, we'll be able to show you we're basically we were on a downward trend, obviously. So we're not as high as where we were about 4 months ago. And we were consistently on that decline. And then this is when the Fed spoke, and then we started breaking under 6. And we've been really battling that for quite some time. And then obviously we took a little bit of a turn at the start of the month at 7.04, and then it continued on an upward trend. Friday, it dropped. So luckily on Friday, I locked 9 clients, knowing the expectation that heading into this type of week with a lot of data, that clients were going to be faced with less than favorable rates as opposed to Friday. So we were able to take advantage of that and take it from there. All right, guys. So again, a little bit of a shift today. We did see a sharp decline on Friday, which is why we prompted to lock some clients. So as always, I'll keep you guys updated. We'll continue to see exactly where the Fed market kind of shifts in. And then hopefully we'll start seeing a little bit more insight and it'll kind of give us an idea as to what I can now confidently tell clients, because I hate saying I have no idea where the interest rate market is turning, but it's truly very, very difficult to predict. At the end of the day, if you're a client thinking about the cost of buying versus waiting, it's not always the best time to buy or worst time to buy. It's your unique situation. So you really have to kind of keep an eye on that as always. So any questions that you guys have, please feel free to give us a call and we'll talk from there. Talk to you guys soon.